Hello everyone, my name is Amandeep Singh, and as you know, I'm a CPA at Cloudiverse CPAs. Have you ever strayed and started down the dark path when the values of your personal expenses paid by the company have not been charged to the shareholders' loan account? If the answer is yes, you need to see this video to understand the tax implications. Towards the end of this video, I will also reveal tax planning tips for shareholders' loans. In a 2004 court case, for shareholder personal expenses paid by the company, the Canada Revenue Agency levied significant fines and penalties against both the shareholders and the company they owned. The company was owned by 4 brothers. 3 of the brothers were professional engineers and the 4th brother was a bookkeeper. So what happened? The CRA investigation revealed that $229,000 cost of Mercedes-Benz vehicles, which were brothers' personal vehicles, were charged to equipment repair and maintenance expense. An additional $239,000 worth of expense related to interior decoration, computers, and travel costs were also deducted as a business expense. The CRA included the value of the benefits of the shareholders' income and denied the deduction to the company. In addition, significant fines were levied as the violation of the rules was clearly intentional. You see, a company is a separate legal entity from the individual who owns the shares of the company. I see many times business owners are so passionate about their business, they see the company as an extension of themselves that it becomes really hard for them to understand that any money or any other property may only be removed from the company through the payment of salary or dividends, which get taxed in their hands. As a shareholder manager, it is in your best interest that you be aware of other types of income inclusion that are not as obvious as, say, dividends or salary. These are commonly referred to as shareholder benefits. The general rule is that if the benefit is granted to a shareholder, the benefit is included in the shareholder's income in the year in which the benefit was conferred. It is not uncommon for owner-managers to have the company pay some of his or her personal expenses. One of the most common shareholder benefits is personal use of company's property, such as using the company's vehicle for personal use. If the shareholder is using corporate assets for personal use, well, the amount to be included in the shareholder's income is an amount that would be agreed to between parties that were dealing at arm's length. That is, they were dealing at fair market value. For example, if your company pays for your personal use car or a vacation property or renovations of your home, you will be required to recognize this benefit in your personal income for income tax purposes. The value of the benefit is not deductible to the company, regardless of whether the amount is later repaid. This rule does not apply to salaries, wages, bonuses, employment benefits, or dividend that already gets included in the shareholder's income under other provisions of the Income Tax Act. Now you may ask, what the heck is shareholder loan? Well, it is similar to your kitchen sink, that it is a repository for all contributions made by the shareholder to a company, less draws taken by the shareholders. Contributions to the account may come in the form of unpaid dividends or bonuses, cash contributions, or operating expenses paid for the company. Draws may be in the form of cash, personal expenses paid by the company, or the value of the corporate assets used by the shareholder. The shareholder benefits, which are not deductible to the company, get accumulated over time, and this results in a debit in the shareholder loan account. Well, in other words, the company has made a loan to the shareholder. When the CRA audits a company, one of the first account which gets reviewed, you guessed it right, is the shareholder loan account. In my other video on dividend versus salary, you can see the link on the top right corner, I discuss how to clear the shareholder loan account using salary or dividends. The tax implications of the shareholder is generally an income inclusion equal to the amount of the shareholder loan. Some exceptions to the income inclusion rules are: number 1, if the loan is provided to you, the shareholder, in your capacity as an employee and not a shareholder, And you, the employee, is not the specified employee, generally meaning the employee who does not own 10% or more of any class of shares. The loan must also have bona fide repayment terms. Number 2, if the loan is provided to you, the shareholder, in your capacity as an employee, not a shareholder, and the loan funds are used to purchase a home or a vehicle to be used in your employment, or to purchase shares of certain companies, and also the loan must be for bona fide terms. Number 3, if the loan is repaid within 1 year after the end of the year in which the company made the loan. Some creative entrepreneurs ask me, what if they borrow funds and repay it just before the year end and then again borrow the funds right after the year? Well, please be advised that this exception does not apply if the loan is considered to be a part of a series of loan or other transactions and repayments. Number 3, if the company providing the loan is in the business of lending money, that is a bank or a credit union. If none of the exceptions are met, the amount of the loan is included in the shareholder's income for the taxation year in which the funds were loaned. If one of the exception is met, well, it's your lucky day. The amount does not need to be included in your income. In closing, if you are a shareholder in a company, you need to be aware of the potential income tax implications of the use of corporate assets for personal use. This information and knowledge can help you prevent paying interest and penalties on surprise tax bills. Invest in a good CPA to do tax planning for you and your company and to help you grow your financial well-being. I hope you found this video and this information useful. For more tips and tricks, please visit my website, the link for which is given in the description of this video. Finally, please like, subscribe, and comment on my videos. Thanks for watching this video and see you next time. Bye.